Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on with that price action and what we think is likely to happen next. As I get into this video, if you find it useful and informative, smash the like button, I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, link is in the description down below. It's the first place we go to notify you of everything that's going on in the crypto space. Right, let's jump right down into this video then. So Cardano's ADA paired up with USDT. We're using BitGet's spot exchange for this one, and we're on the 1 hour time frame. So let's take a look. Right, our expectations in the last video were to move up to the 27.8247 to 28.3634, and obviously we overextended and went way above and beyond that, which is cool in itself. But what does that mean? So let's go ahead and just review structures. Okay, we actually did move down here deeper. This was a more WXYXZ structure by the looks of it, so I'll just go ahead and take that one into here, like so. Okay, and actually, could we be diagonal? We could probably be diagonal in there. That's interesting in itself. Let's see. Not diagonal. No, I'll go with WXYXZ. Okay, cool. So, so we can see here, this low is lower than this existing low. So what we'll do is we'll tidy all this up actually, make it a little bit cleaner. We'll go with a truncated C wave just inside there. It comes down to like that double bottom, minimum expectations, and then we get this break to the upside. Now from here we can see that we have our, see if I can get this on the wick low there. There we go. We have our moves here, and we're still, we're just getting rejected on the 0.618. So still a little bit of room to the upside there to be had. Fair value gap sits right up here. There's actually a couple of fair value gaps, I think. We filled those actually, to be fair. That's the only one remaining. So I'll draw that in whilst we're here, and we'll then talk about what's going on. So 31.2725 to 31.5200. Okay, that happens to fall in line with the 786, and I'm not sure we have the momentum to take us that high right now, not without some kind of correction to start with. But as we kind of were just talking about this being our double bottom expectations, we've met the minimum expectation on our C wave already here, but we would expect it to typically go a little bit higher, more towards 33.1283, maybe pushing a little bit higher at 35.3207. But I'm not expecting that, because that would make us push us out of our structured structure for Cardano's ADA, which I don't think on a macro level we're likely to do. As you can kind of see from our stochastic RSI, is indicating on the hourly chart that we have the momentum shifting, meaning that we probably can still push up a little bit higher. But on the daily time frame, the 20 hour, the 16 hour, the 12 hour, the 8 hour, the 4 hour, they're all overbought, and we're looking for a pivot to the downside. Okay, so we're kind of reaching that kind of point where we can have some smaller movements to the upside, but for the most part, we're probably going to start seeing a bigger reversal in the market before we can then start actually talking about bigger upward moves afterwards. So for now, this actually looks quite interesting. It looks like we are, not only have we got all these fair value gaps down here now in the chart, right, which are likely to go ahead and fill out, we find ourselves with one fair value gap at the 786 and the 1-to-1 at 33 cents. I think we're probably, if we're going to do anything, come up to this area of resistance just above that that fair value gap at the 31.2 to 31.5, but we'll see how that one plays out. As you can kind of see here, we're kind of grabbing these fair value gaps, at least that first one. We probably are going to fill that out by the time this video even goes out, so we should kind of fill out the fair value gap down here at 28.92 on the low side. And for those who don't know, let's just jump over into BitGet. We'll go over into our spot trading, and what we'll do is we'll go into an ADA pair. I'll just come here and just type ADA in and go over to our ADA USDT pair. Okay, so for those who don't know, basically fair value gaps are created from imbalances in our order book, right? So you can kind of see we had this fair value gap, we filled it. Okay, these two still remain, but there are fair value gaps all on the way up here. Okay, let's go ahead and just draw in some more rectangles. And as you can kind of see from our trading view chart down that we were looking at previously, this one here, right? These are all being drawn by an indicator called 𝗕𝗪𝗧𝗧, Smart Money Concepts by 𝗕𝗪𝗧𝗧. It's not that good. It sometimes leaves some gaps so it doesn't highlight them for you. So it's always good to kind of be able to draw them yourself. And if you're looking for more detail on that, check out Cheeky School linked below. But if I take this over here, for example, and we can kind of see and just draw these fair value gaps in, you can see how price wants to kind of go ahead and fill them in. Now we can see that there are a couple that we're looking to kind of fill out right now, which sit right inside here. So as I was saying, it's created from an imbalance in the order books, right? If there's too much buying pressure and not enough selling pressure, as in there's huge buy orders and not enough people selling to them, the price has to go from the low side to the high side to find those sellers in order to fulfill those buy orders. And as such, when the market is illiquid in certain price points, you find price jumping to the upside. Price is looking for liquidity, right? That's what it's doing. And so these gaps get left behind whilst that process is going on. And essentially that imbalance in the order books, that illiquidity, creates these fair value gaps, and price likes to come back and put liquidity where liquidity was not. Now, it's not a guarantee, but for the most part, as you can kind of see, we find ourselves with fair value gaps all over the place all the time, and price wants to go back and fill them in. Okay, now there's a lot of fair value gaps to the downside here, and that's an indication that at some point, price is going to have to come down and fill those gaps out. I say has to, it doesn't have to, but I have the expectation that it probably will. Okay, there's a high probability that price will want to go down to those fair value gaps, in the same way that you see with CME gaps on the futures market, right? Price likes to go ahead and make sure that they fill out those gaps. It can take a very long time. It can take no time at all, right? Timing it's going to be incredibly difficult. But for the most part, when you have these differences in the order books or these imbalances, you create the fair value gaps, and then price wants to go back and fill them out afterwards. You can argue it's manipulation because usually it's large smart money funds, big billionaires, millionaires, institutions that can create these fair value gaps in the first place, which means do they create it to create pockets of liquidity only to take the price back down there later? Possibly, because this market is heavily manipulated at times, and not manipulated by like exchanges and things like that necessarily, but essentially what I mean is large players can find projects with reasonable liquidity and then take advantage of that. Okay, and if you're not familiar with liquidity hunting, that's something else that you might want to do some research into. And on that note, guys, it's probably worth just noting that 𝗕𝗬𝗀 is kind of like my go-to platform for trading. I do all of my leverage-based trading at the moment on 𝗕𝗬𝗀, and I do 90% or 95% or so of my spot trading on 𝗕𝗬𝗀 as well. So if you're looking for a new exchange that maybe isn't, you know, Binance, KuCoin, or something to that effect, why not go ahead and check out 𝗕𝗬𝗀? Affiliate link is in a description down below, and yeah, let me know if you have signed up. There's some fantastic offers available for everyone who does sign up with that link, and also a weekly trading competition that we host down in our Discord server for everybody who has signed up to 𝗕𝗬𝗀 using that link. More details found in the Discord server, also linked in the description below. Let's jump back down into our charts, right? So as we can kind of see, our expectations are this move to the upside a little bit further, but I don't think we're going to reach the full 33 cent ultimately. Now, if I take this over here, you can kind of see that the expectations are that we are to pull back down into a fifth wave movement here, because we find ourselves in this 5-wave structure. And well, that means we're going to have to come down into a new lower low at some point for Cardano. Now, a move to the upside here has occurred, but we're still, in my opinion, in wave 4, meaning we still have a lot further to go, in my opinion, to the downside. But obviously, the higher that this goes, it changes our outlook. The higher that wave 4 goes, the lower that wave 5 must go. So right now, although we're still in the 18 cent range, it has pushed us down ever so slightly further. Okay, so now we're talking about 18.11 to 20.42. Let's see if I can even get this onto the 42, which I don't think I'm going to be able to. I'll leave it at 4.1 for now. Okay, the higher that goes, the lower that will end up going again. Okay, so for the most part, as you can kind of see, expectations here are that we eventually have this rug pulled from beneath us and we'll come back down again into fresh lows. Whether or not you choose to believe that Cardano ADA is a security or not, there's a lot of fear around that in the market. Personally, I don't think it is. I think the US are overstretching, basically just doing what the SEC does best, wreck retail investors, because I'm sure that's actually what their mission statement is. That being said, I have a bright future, in my opinion. There is a bright future for Cardano. In my opinion, I think there's very few protocols that are being built with future in mind, regardless of what the SEC think. It will not stop crypto. Crypto is not for the SEC. Crypto is not for the governments. Crypto is for the people. And it's important that we remember why this thing was created in the first place. It's due to the corruption of the banking system and these corrupt individuals at these institutions like the SEC. Crypto is to fight against those. It's for the people, it's not for the governments, it's not for the SEC, and together the people will be successful, in my opinion. I think that's going to wrap this video up right there. Expect small moves to the upside on the smaller time frames, but essentially on the macro level, I think we have further to the downside to go. Let me know what your thoughts are in the comments down below. I'm going to leave it there. Found it useful, smash the like button. If you're new, subscribe. And if you're looking for a new exchange, why not check out 𝗕𝗘𝗪𝗔𝗥𝗘. Affiliate link is in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.